Hello, my name is Joe Galadowicz, President of Dymedex Consulting, and I want to thank you for taking a few minutes to learn a little bit about our business. Let's start with talking a little bit about risk and risk management. You know, one of the things that is always a challenge and important when advancing medical technology is understanding risk and taking it off the table. And of course, there's always a focus on IP risk, regulatory risk, and technology risk. But in our experience, there's less of a focus or understanding of market risk. And market risk is an area that we think needs greater scrutiny for companies as they endeavor to become successful with their medical technologies. Just as an example, and these of course are large companies that have struggled with understanding market dynamics and being able to really drive their technologies into the marketplace successfully. Johnson & Johnson here, for example, with their gene search test, wound up taking it off the market because of low adoption. In our view, these are things that were knowable before J&J had launched the product and could have avoided the expense of both launching and retracting the product from the marketplace. Transoma failed to understand the runway that was required in both time and dollars to be able to advance their technology into the marketplace successfully. They had a proven technology, but they simply ran out of money. Boston Scientific, we know this story well in terms of the situation with Guidant. Not long after Guidant was purchased and the ICD business was acquired by Boston Scientific, the market declined. Within a quarter, in fact, of that transaction. And again, these are knowable inflection points and market dynamics that are critical for a company to understand as they invest in their technologies. So one of the things that we do as a company is really understand market risk and help companies take it off the table and manage it effectively. So we help them reduce market risk by doing strategic market analysis and really helping to understand what's going on in the marketplace for a given medical technology. The four main areas that we focus on are to accurately assess the market potential for a medical technology, and that includes detailed segmentation to really get down and understand the various sub-segments within the market that are going to respond differently to the medical technology. We also understand and identify what are the hidden barriers to broad adoption in the marketplace. Within that, we also quantify the investment and time to be able to access that broader market. We know that, and you know that getting at sort of the early adopters is a relatively straightforward thing, but getting really the broader market to embrace a new medical technology or even an older medical technology is a difficult task, and we have some proven methods and techniques to help identify what those barriers are and understand what the investment and time is to access that market. And then lastly, that leads us to the ability to forecast revenue in a very accurate way. And that, of course, is very beneficial for clients as they look at what's the ROI of making those investments. So we help our clients secure additional financing, make better decisions, focus their investments on the right kinds of strategies. And it turns out that our work, we find, has a lot of benefit in helping our clients with their clinical strategy, with product development, with regulatory and go-to-market strategies as they look at geographic expansion, how they optimize their portfolio, as well as exit and liquidity situations. So one of the things that is very important in understanding the dynamics of a market for medical technology is kind of where your technology is at on the adoption curve, and we endeavor to deconstruct, if you will, the adoption curve for any medical technology to understand these three very important inflection points of milestone 1, if you will, milestone 2, and milestone 3, and really getting clear about what is the investment, time, and revenue associated with each of these important milestones. Because depending on where you're at on this curve, there's very important information that needs to be understood about what kind of investment and time and revenue to expect to be able to move to the next milestone. And what's the revenue ramp look like? Are you looking at 2 or 3 years or 10 years of double-digit growth between milestone 1 and milestone 2? And is that double-digit growth in the 10 to 15% range or in the 30 to 40% range. We can help identify and quantify these kinds of questions. So when we talk about medical technologies that are just coming into the marketplace, one of the things, of course, that we're all familiar with is how do we improve enterprise value. And enterprise value, of course, can be enhanced through milestones that occur prior to launch. As you achieve these milestones, you take risk off the table, and of course enterprise value goes up. But after launch, enterprise value really is dependent upon the expectations that you've set in the marketplace for your technology and with your investors. And you're either meeting those expectations or not. And so if you've committed to 50 or 100 million at 5 years, and at 2 or 3 years you're at 10 or 12 million, then the opportunity to drive additional investment and secure your strategy and focus on what's next for your business becomes at risk because you failed to meet expectations. Just in simple terms, one of the things that happens frequently is you're out in the marketplace and you think there's a ton of runway ahead of you in terms of market penetration, and all of a sudden the market slows down. And one of the simple things that we highlight with our clients around how these structural changes occur in the marketplace is demonstrated by this simple diagram. If 50% of your physicians or clinicians are faster adopting and 50% are slower, and 50% of your patients are more compelling and 50% are less compelling, then naturally at about 25% penetration of your market, you will see an inflection point. You will see a change in growth rates from faster to slower. And inside of that 25% is another inflection point where you go from even faster to that rate when you have your very adoptive, pioneering physicians adopting your technology and using it, if you will, for the perfect patients. So we help to quantify and identify these various inflection points so that you know where they are and you can manage your business around them. Another very important thing that we help our clients do is understand for old line technologies whether or not they've reached saturation. So this is an example of a company that we worked with last year where they had 2 technologies in the marketplace for over 20 years, and they thought therapy A was well underpenetrated and ready for additional growth, and they were investing in that direction, and they actually thought therapy B was fully penetrated. You know, through our work and our analysis, we were able to help them understand that actually therapy A was quite penetrated and therapy B was the opportunity. And so what had been going on over the years is they were sub-optimizing their investments in both of these therapies, and going forward they were able to go into harvest mode with therapy A and to rigorously invest in therapy B and reap those incremental opportunities. So when we do our work, we really focus on the scientific method and being data-driven and grounded in how we do what we do and how we approach the analysis of a marketplace and of a disease and a condition. We're really focused on how does your medical technology, whatever it might be, get integrated into this disease or condition in the marketplace. And we use a combination of existing data, published research data, our own methods and concepts and methodologies as we develop models to understand the marketplace and understand the disease and how your technology will interact with it. We've analyzed over 35 different kinds of medical technologies and looked at many, many different geographies, and we have also looked at all kinds of different types of medical technologies, whether they're diagnostics, therapeutics, implantables, so on and so forth. And we have a demonstrated track record of accuracy in terms of identifying these big inflection points, both on the positive and on the negative side. And we can do that for a variety of medical technologies in a variety of circumstances. So I'll just end with this point to say we can help you increase the credibility and your confidence in how you're going to penetrate the marketplace. We can inform critical and expensive strategic decisions that you have going forward. We can help you effectively set and meet expectations with all of your stakeholders. We can help you establish and increase your fundraising activities. We can help you maintain control over the strategic direction of the business, really by driving alignment in the organization. When everybody agrees on the right view of the marketplace, you can be very effective in moving the business forward. And lastly, we really help you sustain market success and enterprise value. As you can set and meet expectations, you can drive much more rapid growth and sustainable adoption in the marketplace. And with that, I'll finish, and hopefully we will have a chance to meet during the show, and please feel free to contact me with any questions you may have. Again, my name is Joe Galadowicz, President of Dymedex Consulting. Thank you.